Hi there, welcome to Kneppy Invest. Volpara, a company I haven't been following that closely for a few reasons, and we'll talk about those reasons during this video. But there is potential that Volpara have hit a very important inflection point in the December quarter. And there has been increased interest in this company after the share price has fallen a fair bit over the past 18 months. So the question I have, and potentially the market has Volpara actually reached this very important inflection point? And that inflection point is becoming operational and free cash flow positive. This company has never achieved that until the most recent quarter. And in my opinion, this is the most important point or part of a company's life. This is sort of a validation that a company is real, because I don't consider any company that is not generating any cash flow to be a real business. But when they can generate cash and generate profits in their business, that's when the company becomes real. So potentially Volpara has reached this very important inflection point. Volpara is a health technology software company with AI-powered software for the screening and early detection of breast cancer. So in a way, we all want this company to succeed in the long term. And at this point in time, it looks like potentially they are getting to that point. Volpara was founded in 2009, so it hasn't been around for that long, and listed on the ASX in April 2016. The largest shareholder, and in fact, Harbour Asset Management, have been increasing their stake in this company, and they're up to 14.1%. Current market cap of Volpara is 210 million. That's at a share price of 84 cents, and that is increasing. We'll have a look at a chart later in the video. And the T code for this company is VHD. Volpara does have a relatively new CEO, Terry Thomas. She was hired in this role back in April 2022. So not quite 1 year as a CEO of this company. She actually is a registered nurse with a Master of Science degree. She's also was apparently instrumental in growing a company called Epic from under 100 employees to over 10,000 employees. So based off her history, particularly in management in healthcare IT, ranging from strategy and operations to running global sales and marketing teams, she could be a really good fit for Volpara, particularly where they are right now. So I think this could be a very good hire for the company in the long term. But if Terry Thomas actually left her CEO role in Volpara, it wouldn't be the end of the world for this company. Now, in saying that, if this guy, Ralph Ingham, if he left his role as the Chief Science and Innovation Officer, that's when I would become concerned. He was one of the founding directors of Volpara, and his research in digital breast imaging goes back over 25 years. He is University of Oxford educated, so he has a lot of history in this area, and I would probably say he might be the brains behind this company. Now to my point in question, whether this company has reached the very important inflection point, sort of already given it away, that this company is now operating and free cash flow positive on a quarterly basis. That's very important to state. It's only one quarter, but I'll get to that in a couple of slides. What I'm going to do now is go through the last 3 December quarters. And I'm also going to discuss why, even though they might have hit this very important inflection point in this latest quarter, I don't think it is confirmation just yet. And you'll understand that later in the video. There are 2 reasons why I am not overly excited right now with Volpara. I am not rushing in buying shares for this company because I still want some confirmation that they have reached this inflection point. And we might have to wait. Well, I might have to wait 3 to 6 months before I get that confirmation. Now, let's go back 2 years to the December quarter of financial year 21. And when we compare this particular quarter to last year's quarter, you can probably understand what I'm talking about. So receipts in this particular quarter, $4.6 million New Zealand dollars. This is a New Zealand-based company. Another successful New Zealand-based company. Seems to be quite a few on the ASX. But even though they generated $4.6 million receipts in this one quarter, they were operating cash flow negative by $3.1 million. And if you look at the 9 months to date, they're operating cash flow negative by 10.3 million. But 2 years ago, they had plenty of cash, $60.6 million of cash. So that gives the management of this company a lot of flexibility, particularly if they can rein in their spending, but they couldn't for 2 years. And we'll see effect of the lack of reining in of spending plus a few big acquisitions, how that has an effect on the cash. Now let's go back to last year's December quarter Appendix 4C. So this company grew their receipts by 2.3 million, yet were more operating cash flow negative, 3.3 million. Whole reason behind that is even though they grew their receipts from customers, they grew their spending by a greater rate. And that's not what I want to see for these type of companies. I want to see some scale. I want to see a company that's able to grow their receipts at a greater rate than their spending. At this point in time, Volpara had not reached that stage. So burning through $3.3 million of cash in that quarter and $8.8 million of cash through the first 9 months of financial year 22. So some of the reasons why they grew their spending includes research and development up 500,000, product manufacturing and operating costs up 300,000, advertising and marketing up 600,000 from about $100,000 to $762,000. So they really ramped up their advertising and marketing during financial year 22. Staff costs up 300,000, and that was their biggest cost. Staff costs at 3.5 million, and administration costs up 300,000. You also notice that the cash on hand at the end of this particular quarter was 21.3 million. And more than likely, that significant decrease in cash from financial year 21 to financial year 22 was because of an acquisition. In fact, Volpara have made 2 fairly big acquisitions since they listed on the ASX. The first one was MRS Systems, a patient tracking software, and they've also made the acquisition of CRA Health, which is a risk and genetics software company. Now onto the most recent quarter, and the reason why I'm asking the question, has Volpara reached this inflection point? Because they've grown their receipts, or they've continued to grow receipts, up to 11.2 million. However, not only have they grown their receipts, they've cut their spending. So research and development down 400,000, administration costs down 400,000, product manufacturing and operating costs up 250,000, and staff costs up 500,000. But their spending did not grow nearly as much as their receipts. So receipts up 4.1 million. And that means the company in this one quarter was operating cash flow positive by $1.8 million. The other thing I should mention out here is the operating cash flow wouldn't be as high as 1.8 million. In fact, it probably would be just below $1 million. But the company received money in regards to income taxes, and they received $439,000 in government grants and tax incentives. If you take away both of those, this company, again, would only be operating cash flow positive by just under $1 million. But they were operating cash flow positive. And that means the company actually grew their cash on hand from 11.6 million to $12 million. And the thing I'm looking for all companies is the ability for a company to grow organically. And that means through their operations. And the first way a company can grow organically through their operations is becoming operating cash flow positive. And potentially, Volpara have reached that stage. But we need proof, we need confirmation that they can remain being operating cash flow positive over the next few quarters. That's just me being a little bit more risk averse. I think the market is being a little bit more risk taking right now, pushing share price up for Volpara based off this particular quarterly results. But there is one thing I'm really excited about Volpara, and that is the growth in receipts over the past 7 years. In fact, we have receipts history going back to the June quarter 2016. Now, from June quarter 2016 all the way through to the June quarter 2018, receipts were less than $1 million a quarter. Even during 2019, they were struggling to remain above $1 million. But we have seen a continual growth in receipts through time. There have been periods of time through this history where receipts didn't look like they were growing. From the September quarter of 2019 to the December quarter 2020, receipts were just going sideways. and then they started to climb again. So no doubt COVID-19 did affect this business. But we have seen a significant growth in receipts over the past 3 years, or we'll say 2.5 years, growing from $4.6 million in the December quarter 2 years ago to $11.2 million. So not quite tripling receipts, but it's getting to that point. And we also saw a significant increase in receipts in the last quarter. And it's probably the biggest increase in receipts in one quarter, apart from September 2019, where Volpara saw their receipts grow from 2.3 to 4.9 million. A couple of reasons why both those quarters were significant could be because of acquisitions. And sometimes you will see the effect of acquisitions just by looking at receipts. But the main thing here is receipts for Volpara have been growing through time at a fairly consistent rate. But in my opinion, we do have to be wary about this particular quarter, not making the assumption that it's going to be all great things for Volpara moving forward, that they won't have more operating cash flow positive and free cash flow positive quarters over the next few, because in the commentary, the management were just being a little bit more conservative. And I'll get to that in a second. Now, some of the reasons why this was a good quarter in terms of operating cash flow, they mentioned there was a material uplift in cash receipts due to improved debtors paid. So this was a change in working capital. And one of the flaws of quarter reports and the quarterly cash flow statements is you don't see any changes in working capital, and improved debtors would have helped Volpara in this particular quarter. Also, reduced costs. We've already talked about this due to redundancies made in the second quarter of financial year 23 and overall cost reductions, which were in line with Volpara's revised strategy and guidance of less money out. So what's been happening over the past 18 months has changed the way management of Volpara have conducted business. So less spending. And maybe they're wondering whether they can grow the company without spending more. And it seems, based off the last quarter, they are doing that. They've also mentioned here the government grants and the R&D tax credit received, totaling about 900,000 New Zealand dollars. Now, one of the reasons to be wary is this little bit of commentary. And right at the bottom here, we do not expect receipts in the fourth quarter to match those of quarter or the third quarter, but we do expect them to show continued consistent growth on prior corresponding periods. So that means 1 year ago, Volpara management still expects receipts to be greater. So they don't expect receipts to be greater than the third quarter, but they should be greater than the previous corresponding period. So I think there is a possibility, particularly if they don't decrease spending, that the company might not be operating cash flow and free cash flow positive in the fourth quarter. And I think if they aren't, and the market's getting a little bit ahead of itself right now, we could see some pressure on the share price. And this particular table, graph, whatever you want to call it, from one of their presentations perfectly explains why, or what I was looking for when it comes to Volpara. This is their net operating and investing cash outflow over the past 2 years. So we remember the cash receipts were growing consistently through time, but their spending for this company was also consistently growing through time. The company was showing no scale, and this perfectly personifies that lack of scale in the business until the latest quarter. So the net operating cash outflow was fairly consistent. In fact, it was getting worse, very slightly worse over the past 2 years until this quarter. So this curb in spending has been beneficial for Volpara just looking at this one quarter, but we want to see, and market may not want to see it, but I want to see this continue for the next few quarters, the last quarter of financial year 23 and the first quarter of financial year 24. Now onto the charts, and the first chart we're going to look at is the weekly chart from when the company listed on the ASX back in 2016. A lot of interest in this company from when they listed all the way through to about 2020. In fact, the share price reached a high back in 2019 at $2.18. So this was prior to the COVID-19 financial panic. Volpara was affected by COVID-19, so we did not see the share price after COVID-19 get back to those 2019 levels. But a lot of negative sentiment in this company through 2021 into 2022. And one of the reasons behind that was simply because they were not able to generate cash inflow through their operations. And companies like this were punished by the market, absolutely punished. And Volpara was no exception. Share price dropped from about $1.70 at the start of 2021 all the way to a low of about 42 cents in June of last year. But the share price is starting to recover. And the question is a new uptrend developing? If you look at the weekly time frame, not quite yet. But if we look at the daily time frame, we can see some positive momentum in the share price. We have also seen the share price move through a resistance level, and that resistance level has now become support. So let's have a look at the daily chart now. So this is the daily chart going back to about September 2021. You can see that negative sentiment in the company through most of 2022 drove that share price down. You could probably argue in the last half of 2022, share price was going sideways because the share price did reach that low back in June. And you also see when the share price did reach a low, there was a lot of volume coming in. That's actually a pretty good sign the share price is trying to reach a low, because you are getting interested parties within the market seeing some value, and they can prop up the share price. So it's just interesting to see that increasing volume when the share price reached a low back in June. And the last two lows have been higher than that June low. The last high we saw was back towards the end of December, and the low previous to that was back in September, and those two lows have been successively higher. So you could argue we've seen two higher lows, which is a sign of a share price trying to move into an uptrend. But there was a resistance level at about 72.5 cents. So the rally back in July after that initial low, or the first low, actually reached about 72.5 cents. The rally after the September low rallied to 72.5 cents. And then the last low, the rally we saw, was trying to rally up to 72.5 cents. And then the company released their Appendix 4C, and the share price went right above that resistance level. So that's on strength, some high volume, and that what meant that the resistance level had now become support. I was looking for the share price to pull back towards 72.5 cents. I think the amount of strength we have seen the share price over the past few weeks since the company has released their Appendix 4C, I'm a little bit doubtful the share price can pull back to 72.5 cents, because that is a support level. But if I do see the share price move back to 72.5 cents, I might think about taking a position in this company. That's all I have for this video, looking at Volpara's Appendix 4C for the December quarter. It raises the question whether Volpara have reached that very important inflection point of becoming operating cash flow and free cash flow positive. In this one quarter, they have reached that point, but I need to see the company continue that momentum through the next few quarters. The market is getting a little bit excited, but there is a possibility the market is getting a little bit ahead of itself based off the commentary from the management of this company. But Volpara is moving in the right direction, in my opinion, but I just need some confirmation because I'm being a little bit risk averse here. I just need confirmation that they have reached that inflection point. So if you have different opinions from mine, if you are a Volpara shareholder, I'd love to hear your opinion on why you have taken a position in this company. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.